Hi, Emily from Green Home Loans. What a great week. What a lucky week we have. St. Patrick's Day is just around the corner. If you're like me, you like to celebrate that. We had a great celebration yesterday as a family. But on the mortgage rate front, it looks like we see some leveling out going on here. Now, the Fed is meeting this week. Will they be reducing interest rates? More than likely not. But we are seeing some improvements in the overall numbers on interest rates, which means they should be staying pretty steady. Probably not going to see any major changes, at least over the next week or so, hopefully. So that is good news. Of course, rates do change on a daily basis. So if you are somebody who's shopping around for interest rates, understand that if you get a rate on a Monday, the following Monday, it could very well be different. So there are some fluctuations with that. I wanted to come at you with some myths about home buying that people tend to have. So when I talk to people, there's always a myth out there that FHA is the best route to go when it comes to home buying. It stands for Federal Housing Administration. It is a government-backed loan. It is a good loan. There's nothing wrong with an FHA loan. But if you're somebody with incredible credit, very low debt, you might be wanting to look at more of a conventional conforming loan that's not government-based. So you're going to get better opportunities within that particular loan, and it's more suited for you. So FHA could be a good route to go, just depending on what you're looking for. Again, somebody like myself, a broker, is going to be able to explain those things for you and share some good needed information to help you understand the differences and find what's going to be best for you. Another misconception is that you need 20% down to buy a home. You do not need 20% down to buy a home. Even if you're not a first-time home buyer, the largest down payment is traditionally 5%. If you do avoid what's called mortgage insurance, which is insurance for our lenders, not for you, you will be paying that additional tax if you don't put 20% down. And you can always do the math. Mortgages are math, so you can look at that mortgage insurance and see if it makes sense to avoid it with a larger down payment, or if you should just accept the mortgage insurance, pay the lower down payment, and wait to see that 20% equity occur over time within your